What's going on, guys? It's Andy here. Welcome back to another episode on the Andy Kandola Show. So as we can tell from looking at my portfolio is down $4,611. We're down about 3%. Now, guys, I do believe that there is a correction happening in the market, so I would not be surprised if this portfolio went down another 5 to 7%. In this video, I'm going to go ahead and share with you guys why I'm going all in on stocks, the top 5 new stocks that I just started investing in, plus the cause for this correction. I do believe that we're in the middle of the correction, and there's a couple different catalysts that I believe are going to be causing this, especially as we go into the winter months and as we get into the beginning of next year. Now, if you're new to this channel, don't forget to subscribe to the channel below. I'd like to be fully transparent, keep you guys posted on where this portfolio is at week after week. Last week I shared that I hit all-time new highs in this portfolio, but right after that, 1 week later, we are down about $4,600 in the account. So the value in the account is sitting at $149,238. So just to share with you guys where the portfolio's been at over the last couple months here, and since I started, in the last month, we were still up $2,847 or 1.98%. In the last quarter, we're up 12.84% or $15,973. In the last 1 year, we are up $11,260 or 11.79%. And then all time since we started this portfolio, we are up $16,608 or about 22%. Now, there's many different catalysts that basically made an impact and that are causing this correction. I do believe that we are going to see a market correction between 5 to 10%. And that's because there's many different things that are going on in the market, including the biggest thing of them all, which is the Delta variant. With the Delta variant, it is spreading like wildfire. It is a much stronger variant. So people that have the COVID vaccine are spreading it to other people that don't have the vaccine, and it's really making a bigger impact on people that don't have the vaccine. But why this is really concerning is because, hey, we're going back to where the economy could slow down, where people are not going to go out as much, where people are not going to travel, and it's really going to make an impact overall on the whole economy. So this is one of the biggest catalysts that I believe is gonna cause a correction in the market. Now, additionally, the thing with the Delta variant and thing with COVID is that as you get into winter, there's more chances of this virus to go ahead and spread. So it does accelerate the virus as we're getting into the winter months. Now, this is of course the major catalyst, but the other reason why I do believe that we're going to see a 5 to 10% correction is because, guys, if we look at the S&P 500, the S&P 500 is made up of the 500 biggest market cap companies in the world. Basically, if you're publicly traded in the US, you are part of the S&P 500 if you're one of the largest 500 companies, and the S&P right now is trading at a PE ratio of 34.37. Now, as far as being a 34.37, that is considered a very high PE ratio. As we can tell, the mean PE ratio and the median PE ratio have been right around 15. So that means that we're trading in bubble territory. When the price to earnings ratio is at 34 and the average is 15, that tells you guys that, hey, there is a bubble going on. So I do believe that we are gonna see a bit of a correction because this is just not sustainable. Now, the last catalyst is gonna be what's going on overseas. Basically, we've had some tension in China, plus with Afghanistan. There's been a lot of stuff going on there as well. So I do see policies having more and more restrictions, especially because we don't know what's going to be happening behind the scenes in some of the other countries. With Afghanistan, obviously it's been in the news a lot lately. There's a lot of stuff going on where the Taliban is taking over, and they literally took over the whole state. With China, I believe that there's still some tension there. China has been putting a lot of restrictions on their companies, and they're really trying to control their companies. So there's definitely some tension between the Chinese companies and some of the stuff that's going on overseas. So I do believe that that could be a part of where people do get nervous because they don't know what's happening, and because China is one of the largest markets out there. Now, as far as given all of this, what I'm doing with my portfolio is, because I'm seeing an opportunity for a correction, I am going all in. I am still going to be investing every single day in the stock market. My goal during this correction and during basically the next 6 months is to go ahead and just dollar cost average either daily or weekly. What I like to do is go ahead and put away some savings on the sideline or take money from my paycheck and directly deposit it into my M1 finance portfolio and basically take whatever I have, split it up in every single day or every single week to go ahead and just invest it in the stock market. Now, I like to be diversified, so I have the portfolio broken up into growth stocks as well as into dividend stocks. My growth pie has all my growth stocks, and then from there, I have all these other pies that have dividend stocks in them. So my goal is just going to be to dollar cost average in all of these companies throughout the next 6 months, because I do believe that we are going to see a 5 to 7% correction from here. Now, additionally, the other thing that I like to go ahead and do in my portfolio is if I see that the Dow Jones or the NASDAQ have gone down over 2% in one day, that tells me that that's even a better opportunity to go ahead and buy. So what I like to do is just double down on that particular day where I'll go ahead and invest. Let's say I'm investing $200, $300 every single day. I'll go ahead and double down and invest $600 on that particular day. So that's another strategy that I've used in the past because I believe when the market's down that much in one particular day, it's a better opportunity to go ahead and buy. But at the end of the day, it's just staying disciplined. As long as you are disciplined, you have a strategy, you stick with that strategy, the portfolio over time should go ahead and rise. Now, as far as some of the new stocks that I am investing in, that I did invest in this portfolio, there's going to be a total of 5 of them. So the 5 new stocks, and one of them I literally just started investing in because I did my due diligence on this and I believe it's got a big potential, is going to be a company called ASML Holdings. This company manufactures and makes silicones that chip makers go ahead and use to go ahead and make semiconductors. Basically, guys, this is a company that's in the semiconductor industry, and because there's a shortage of semiconductors, I believe there's going to be a huge potential for semiconductors. So I don't see that going anywhere, and that's why I started investing in this company. And it's nice to see that I'm up in this company. I'm up about $2.93, which is obviously not that much, but hey, it's better to be in the green. So this is one of the newest companies that I invested in because I'm very bullish on the semiconductor industry. Now, additionally, I did invest in Robinhood. In Robinhood, we are up 1.77% or about $29. Robinhood was higher, but it started to go ahead and climb back down as we are seeing this correction. So Robinhood is another company that I'm in, but we are in the green just by a little bit. And this company is all about investing and trading and making it easier for investors to go ahead and invest in the stock market. Now, additionally from there, this is one of the newest companies that I started investing in as well, bought into it during the IPO. This is going to be all around the cryptocurrency space, and that's going to be with Coinbase. Coinbase, I am down about 15% or $605, but long term, I do believe that this asset class has a lot of potential for growth. Now, Alphabet is another one that I actually recently started investing in this year. With Alphabet, I like this company. Obviously, I'm on YouTube. I see the potential for this company to go ahead and grow. Alphabet does make a lot of money through their advertisements. So this company, I'm up 16% or $506. And lastly, guys, the last newest company is Amazon. Amazon has not been doing as well as I would have expected, but that's because Jeff Bezos this year announced that he is retiring, and people are just not as confident with the new CEO yet. I do believe the new CEO has a lot of room to go ahead and prove themselves, but we'll see what happens. Amazon is just one of those cash flow positive machines where they're just making a ton of money every single day, and at this point I do believe that Amazon eventually will go ahead and throw a dividend out there, but we'll see when that happens. But I'm still extremely bullish on this company. I use their products, or I buy from this company literally every single week. But in this one I am down 16% or $126. But guys, those are the 5 companies that I just started investing in this year. Again, I do believe that there is going to be a market correction happening. So this is my strategy going into the end of this year and going into the beginning of next year is to go ahead and just focus on buying and dollar cost averaging, of course, in the stock market. But hopefully you guys enjoyed this video. I'm going to leave it at that. If you are interested in M1 Finance, this is the main platform that I go ahead and use for all my investing. Love this platform as a passive income investor that's focused on a long-term strategy. They are giving a $30 bonus right now. If you're interested in that, I'll leave a link in the description. But thank you guys again for watching. Until next time, I will see you guys at the next one.